morning, traders. Richard here, a quick Ichimoku cloud chart and artificial intelligence trading review of AMD, Micron, SanDisk, Seagate Technologies, and Western Digital WDC. These are the tickers on the Metastock platform. We've had some really strong moves after the volatility breakout signals here. If we look at the most recent ones using the artificial intelligence engine, also overlay that with Ichimoku clouds, you can see we had some other nice entry points here from an Ichimoku cloud chart perspective, and we now have to move the trailing stop right up to this zone here, a 424.91, just below the 425 zone. So that's the updated trailing stop for the AMD trade. Micron is another very favorite name here. Fantastic volatility breakout trades there. There's a few other Ichimoku cloud chart trades you could have taken. This one, a breakout part across the top end of the Ichimoku cloud, is another one you could have taken. So the trailing stop for these ones are right up here at 716 is the trailing stop for Micron Technologies for these four trades here. But some really good moves using the AI, artificial intelligence engines, volatility breakout signal. I have shown these before, just updating the trailing stop loss for these stocks. SanDisk, SNDK.O, really big moves here, 164, 154, 161 there. Fantastic move. We now have the trailing stop updated right down to this zone here, just below the 1389 zone. So keep that in mind, the updated trailing stop. Seagate Technology, STX, fantastic moves there as well. Beautiful volatility breakout signals here, as well as cloud chart rebound at the bottom end of the Ichimoku cloud. There's another great signal there. So it's quite useful using Ichimoku clouds and the Fulgent AI engine volatility breakout AI strategy for trading these stocks. Now back to the trailing stop, we're going to move it right up here. You could have a tighter one. 713 is a volatility adjusted trading stops. You could have a tighter one if you wanted to, but that's kind of the one that the AI optimizes, where it looks at the stock's particular volatility and then adjusts the trading stop accordingly. The next one, WDC, is also very strong performance, 83, 114 and 82% there. And then the trailing stop on Western Digital is around about here, but I would move that one much higher. I suspect by the end of the day we'll be right up here, so we can move that one a little bit higher up, just to the bottom end of this support zone here, roughly. Keep that in mind for 470 to the upside there. So far so good. Some great returns here using the volatility breakout signal and the Ichimoku cloud chart buy and sell signals together on these high flying tech stocks. Micron, there we go. Some great returns there, as well as AMD. Next up, let's just go and review the StarMine models, which looks at various couple hundred factors in these models to determine which is a quality stock, which one's got analyst revision, upgrades, downgrades, insider trading, credit risk, all those type things. So we use all these StarMine rankings with multiple factors underneath these. I'm not going to go into detail now of these, just going to highlight what we're looking at. But we've got AMD up here now, and we can see the highlights is very bullish price momentum, scores very high. These are percentile rankings, the higher the better. So above 70 is generally good, and if it's below 30 it's generally not good, and in between is the gray areas, so to speak. But the bullish case is price momentum is very strong so far. The analyst revision score is very high, percentile rank of 100. Analysts are taking up their numbers as well. So there's some strong upward revisions and upward momentum in the earnings. Short interest is very low in the stock. Earnings quality rank is 77. Can be better, but still there. We delve deep into the balance sheet and income statement to see what drives the earnings growth and if this earnings growth is sustainable, etc. So we have a factor to measure that. And we also look at does the company use a lot of creative accounting to manipulate earnings figures, etc. So that's all part of that ranking. Credit risk score and text mining risk score, that's very good there. So there's not much of a problem in terms of credit risk at this stage. But the intrinsic valuation rank is a per star ranking of 6. So it's frightfully expensive on the relative valuation basis as well as intrinsic valuation basis. If we look at all the models there, we can see the intrinsic valuation, relative valuation factors are very low. So we are not buying this as a value play. You're buying high growth, high momentum stock. Yeah, as we can see that from the price momentum rank as well, at ARMA score. So there's momentum in the earnings revisions, there's momentum in the pricing going forward, and we've got a dash of fairly good earnings quality, but ideally like to see that much higher. But you can see here in terms of valuations, where there's the stock ranker globally, not particularly cheap stock, so it is quite an expensive one. And if we look back down here, right at the bottom here, we can see if you're going to use the smartest analyst, the most consistent, accurate analyst that the StarMine model follows, the market implied growth rate is about 30% in the next couple of years for AMD, yeah, and that's what the current stock price implies if you do a reverse discounted cash flow model. So keep that in mind. That's kind of the data that you can see, that it's got quite a hefty price tag, very high expectations, but nevertheless the highlights is very good price momentum score, analyst revision score there, and earnings quality. Is just that the valuation remains a critical of concern. So then Micron is looking very good, yeah, on all measures apart from the relative valuation and the insider model there. Unfortunately, there's still some insider selling taking place in the stock, so that is a bit of a risk factor. And then the relative valuation is quite expensive there, at the bottom 30% of the market. So on a PE basis, very, very attractive. Global rank is 72 per star ranking there. But some of the other ratios are a little bit on the bottom end of the scale. But so far, very good bullish scores here. Valuation momentum, price momentum, analyst revision scores. Smart holdings are the smartest institutions, most consistent, profitable institutions, best performing institutions. Are they buying these stocks? So we look at the smart holdings, for example. Are the best hedge fund managers or fund managers out there holding the stock, and are they increasing their holdings, and when they're actually buying it and selling it, etc. So those are some of the factors that go into that ranking. Then once again, earnings quality is 92 per star rank. That's very good. Not much credit risk at this stage there. So as equity investors, we do want to know if a stock is actually got some credit risk or not. So we can see that in these StarMine rankings. They're very good. A lot of the debt traders use this as well for a particular stock. But combined alpha model is 90 for a per star ranking. Top 10% of the market in terms of combination of all these factors in a valuation model. So they're looking really, really good. I see Micron is probably one of my favorites out of these five. So now we've got SanDisk also doing good on the valuation momentum score, price momentum score. They're doing well. ARM scores also, and its revision score is 97. So the analysts are taking up their numbers. Earnings revisions are increasing going forward, etc. Smart holdings 91% per star ranking, good. Earnings quality 100 per star ranking there. So it's very high quality earnings. If you delve deep into the income statement and balance sheet, and you go look at the respective items that drive the earnings growth, and the balance sheet items there, etc., then it scores very highly on that. So not much credit risk score at this point in time. It's just a relative valuation one once again, and then the short interest is still a bit on the high side there. But there is some structured credit risk there, structural credit risk there. So there's some things to look out for on that. If we just split these models up, insider selling ranking there. Okay, right, now for SanDisk, for example, what the market implied growth rate, I think we don't have enough estimates for that. Yeah, there might not be enough analysts covering that, so we can ignore that calculation there. But so far, valuation kind of a mixed bag. Yeah, you can see it's not the cheapest out there, so it looks more on the expensive side there for SanDisk. But nevertheless, we like the price momentum. We like the analyst revisions are taking up the numbers. The smart holdings, the smartest people in the room are holding this and buying this, so to speak. And the earnings quality is good for SanDisk. Western Digital, WDC, they're looking really good on price momentum score, analyst revision score, and earnings quality there as well. Credit risk combined and smart ratios. Those are, deep dive into the financial ratios. That's also looking looking very good. Insider selling is still much of a concern there. Valuation there, relative valuation globally is also in the bottom 20% of the market, so it's not a cheap stock at this stage of the race, but certainly a one to keep in mind. So price momentum score is very high, ARM score. So as long as the analysts bring up their numbers, company beats earnings and reports good earnings, we are happy with earnings quality. At some point in time, you'll have valuation normalization, and then that'll offer additional entry opportunities when the valuations are more attractive at this stage. But trading it because the price momentum is very high, analyst revision score is also improving. So very, very nice scores there. So that's the bull and bear case for Western Digital. And then Seagate Technologies, STX. Intrinsic valuation, bottom 14 per star ranking. They're not very good there. Relative valuation, bottom 12 per star ranking. Insider selling's 3, so there's a lot of insider selling still going on. Earnings quality is 99. That's a little bit better. That's good there. So it's better than the other rankings there. Credit to STX Mining, so it's not in the red, but it's not in the green either. So that's where we look at, or StarMine looks at some earnings conference calls and what are the tone of the text mining. And there's large language models are used to identify kind of buzzwords that management starts to discuss in a company if they're starting to experience financial trouble, and that we monitor that factor as well when you're using the StarMine rankings model. But intrinsic valuation, not particularly attractive from an intrinsic valuation perspective. Relative valuations also very expensive. Here you can see not attractive on a relative valuation basis here. So you can see it is an expensive stock there on that basis. And the market implied growth rate is 28%. So if you do a reverse discounted cash flow analysis of the current stock price and you want to see what growth rates the price is implying, and that's kind of what you get, 28% per annum in the next couple of years. So that's quite a hefty premium. But so far so good. Stock's been doing very well. Price momentum's been strong, and it's been revisions taking up their numbers. Earnings quality is good. So that is a big plus point for Seagate Technology, STX. So just to summarize back to our favorites, AMD there is 424 as the trading stop loss. Micron Technology there is 716 as the trading stop there. SanDisk, we've got a trading stop of 1389. Seagate Technologies, we've got a trading stop of 713. And Western Digital WDC, we've got a trading stop of 470. Hope you guys enjoyed it, and until next time, happy cloud chart and AI trading. Bye for now.